New numbers Friday show the job market was in strong shape before the coronavirus began to sweep the nation. The Labor Department says U.S. employers added 273,000 jobs in February. And while the unemployment rate edged down to 3.5%, but the outbreak remains a major concern on Wall Street. The Dow lost 256 points Friday. And as Janet Shamlian reports, small businesses are especially worried.
At this small smartwatch startup in Austin, the coronavirus is infecting the bottom line. Just as orders were coming into Unaliware, the Chinese effort to stop the spread shut down factories, including the one this business can't survive without.
What kind of a problem for a company like yours is that?
There are little pieces that we have in the watch that get made in China. And if we don't have them, we can't make watches.
It's a tiny circuit board already paid for. Production is 2 months behind schedule.
And so that makes it a double whammy for a smaller business like mine because the capital is already tied up, but we still aren't able to sell.
Coronavirus is hurting small and mid-sized businesses nationwide. 21% report a moderate to severe impact. More than half say they're making changes, like increasing prices or lowering business costs to protect themselves. Big events are getting hit too.
I've gone ahead and declared a local disaster.
Austin's just canceled South by Southwest conference brought in more than $350 million last year. Back at Unaliware, they're not sure when they'll get their critical parts. A watch company running out of time. Janet Shamlian, CBS News, Austin.
Akiko Fujita is a reporter for Yahoo Finance, and she joins me now to talk about the broader economic effects of the coronavirus. You know, Akiko, a lot of people were watching over the weekend how South by Southwest, the festival down in Austin, has been canceled. Can you kind of put this into perspective? We're seeing more and more people canceling big events, asking not to come to games. How do you measure the impact of that?
Yeah, let's take South by Southwest as an example, because this is an event that attracted upwards of 60,000 people last year. You're talking about hotels having to deal with cancellations, airlines dealing with cancellations, restaurants that are in Austin no longer being able to take in the traffic from all of the people that were expected to come. So that's kind of a real example of the broader impact we're seeing as the fears continue to build up, because people simply aren't going about their daily lives. They're choosing to stay at home. And a lot of these businesses that rely on that kind of traffic are starting to see the big hit.
You mentioned the airline industry. Already they've said that they're tapering down flights because they're seeing the lack of demand. How do you put that into perspective? I know there's a lot of panic. Can you explain how this is really affecting that industry?
Well, let's start by talking about what we heard from IATA, which is the global airline trade group. They came out and said this week they expect the revenue loss to be around $63 billion. Now, just a few weeks ago, they were talking about $30 billion. So you can see how significantly that forecast has grown. Now, that is only if this virus is contained, according to IATA. So if we have the outbreak as it is right now, but it doesn't get much bigger, $63 billion in revenue loss. If it does get worse, they talked about $113 billion revenue loss case, which would put it on par with what we saw during the 2008 financial crisis.
Wow, I keep hearing that word over and over again, comparisons to the 2008 financial crisis, which nobody wants to go back to. But when you look, we've looked at big business now, when you look at regular Americans and their pocketbooks, when will folks at home start to feel and be affected by this?
Yeah, I would argue they're already starting to see the effects, and not necessarily in their pocketbooks, but you can see it in their behavior. People are opting not to go to the movies, for example. We're seeing soft ticket sales on Broadway here in New York. People are saying, well, maybe I don't need to take that flight or that vacation I was expecting to take. So you're seeing more of the corporations, the companies taking the bigger hit right now. And going back to the airlines, we did hear from a lot of the major airlines globally who are saying we're just not being able to fill the seats right now, so we're going to start to cancel some of these flights. And I think the big question moving forward for the airline industry, if that's the biggest sector that's going to be hit, is how long it's going to take. Once it's determined by the WHO or in some way that this outbreak has been contained, how long is it going to take travelers, businesses to say, okay, we feel comfortable enough to get back in the air and start traveling again? And nobody has the answer to that right now.
And yet there's so much panic. I went to the grocery store to get tilapia on Monday, and they were completely out of fish. And the guy told me people are just buying up frozen fish to stock up in their freezers. How does this affect the supply chain?
Well, the supply chain, I think you want to look at different areas. I mean, it's something like food. I did the same thing. I went to a Trader Joe's and I just kind of wanted to get a gauge of whether the panic buying had kicked in. We saw big containers being restocking shelves. So you could argue that that supply chain is still there. Now, if you look at other sectors like the auto sector, like the tech sector, a lot of them rely on parts, for example, that are coming in from China. China has started to see, at least in the epicenter, numbers taper off just a little, but the factories aren't up and running again. So even if you don't, if you're not manufacturing necessarily there, you're looking for parts to come in from there. And so the ports are getting held up, those supplies aren't coming in, and that's going to have a knock-on impact for months to come.
Wow. Beyond the stock market, which we always measure sort of financial abilities there, what other indicators are you watching?
Well, we saw oil, for example. I mean, that's part of the market, obviously, but yesterday we saw a huge drop, 9%, 10% there, largely because we're seeing the demand picture drop. And OPEC has not been able to come to an agreement with Russia, especially on the amount of cuts they want to do in terms of the barrels that they produce on a daily basis. When you look at the broader picture, we have started to get some indicators, although I would argue they're kind of a pretty broad range. Oxford Economics coming out and saying that we expect GDP to be at 2%. OECD saying in the best case scenario, it's likely to shave off 0.5% on global GDP. Wow. But again, that best case scenario is what we know right now. It's the big unknown that's continuing to inject volatility.
Okay, I know this sounds a little twisted, but I want to ask you, are there any industries that are benefiting from the coronavirus?
We're seeing a lot of online industries that are doing well. So telehealth, for example, people may be wanting to call in a doctor, but not necessarily wanting to get out. We're seeing that. Online education, a lot of schools that are staying closed. I can't tell you how many calls I got this week from companies who are saying, you know, we're helping out some of these schools because we've been all about online education. Wow, and then, of course, all the deliveries, the drive-throughs, if you're talking about restaurants and food, it's simply anything that allows you at home to be able to take advantage of because you are too afraid to go outside and go about your daily lives.
Akiko Fujita, I want to thank you very much, Akiko, for joining us.